Hello, everybody, and welcome to the sixth episode of our exclusive interview series with Mickey Fulp, the Mercenary Geologist, and our staff writer, Paul Hers. Good morning, everybody.
Good morning, Kai. Good morning, Paul.
As always, thanks for making the time. It's 7 a.m. here in Vancouver. It's 8 a.m. where you are, Mickey, and I think it's 10 a.m. where you are, Paul, if I'm not mistaken.
I think I've got 9 o'clock, but
9 up.
Yeah.
And I really appreciate, as always, you taking the time. And we've sorted out a couple interesting topics to talk about in our interview series. So, for one, gold is making a breakthrough and broke through their 200-day average. We're going to take a quick look at that. Also, we're going to briefly discuss the mid-tiers getting more active in the space and wanting a piece of the joint venture merger pie. But also, Paul is going to talk about his impressions from the Copper Conference recently in Chile. So let's dive right in. Time is always of essence here, and let's talk about gold breaking through the 200-day average. And what I've been noticing and watching is that the gold stocks, at least the majors, aren't really following suit. And I'd be happy to hear what your thoughts are on that matter, especially one, why is gold breaking out? Why are we all of a sudden breaking through those technical levels? And do you share the same observations, Mickey?
Well, gold broke resistance, as you said, at 1260. It had been bumping up against that for, nearly a couple of months now. And it continues up as we speak right now. It's at 1283, coming off a high this morning at 1287. Geopolitics has ruled the gold world over the last week or 10 days with the bombing of Syria, a terror event in Sweden. We had the Russian-U.S. State Department meetings yesterday, which broke down great negativity in the U.S. about this. North Korean tensions as the fascist dictator there continues to threaten with ballistic missiles. And then finally yesterday, kind of the trump card that Trump played was he said the dollar was too strong again, and that all sent the gold price continuing upward. I think $1,300 is a big number. It's been since October 3rd, over 6 months since we've hit that level.
But why in your opinion is it all of a sudden really gaining momentum now? It's like we've had these, let's say, terrorist attacks before. We've had Trump talking about a weak dollar before. But all of a sudden the market is taking notice and is moving towards gold.
Well, I think the real catalyst last week was the bombing of Syria by the U.S., and that was the first spike up. Then we've seen another kind of a continual rise in a stepwise fashion. But when Trump said the dollar was too strong yesterday, it popped again. And if you remember, did the same thing in January. It's just started at a lower level. So this resistance, 200-day moving average, is always a tough thing to exceed and continue. And I think we've done that now. And I think that 1,300 number is big. We may approach that in stepwise fashion again, and I would hope that was the way the market would go.
It definitely looks that way, and on a macroeconomic level or macro view perspective, it definitely looks that way. It has looked that way for years actually, and finally stuff is happening in that regard. So, onto our second topic, which sort of blends into this. With the gold price moving up, the majors, or actually the gold producers, are producing bigger profits, and as they lowered their costs over recent years. And we've seen the bigger companies, especially like a Goldcorp, Agnico Eagle, or Kinross, moving into the junior space, either joint venturing or actually buying projects. And a trend I've noticed at the European Gold Forum, and also by reading news releases, that the mid-tiers are now getting more active. And I'd like to hear your comments on that, and Paul especially as well. And what do you see happening in the next coming months in that regard, and how can we benefit?
Well, I think this is a normal bull market reaction, and if you look at the second leg of the last bull market, post-global economic crisis, the majors led the way, and it becomes a trickle down. So now it's trickling down to the mid-tiers. with M&A and acquisition activity of one sort or the other. We see the financings, which we'll talk about in a bit. Financings continue to trickle down, and eventually gets down to the penny ante juniors. The Toronto Venture Exchange Index, and Kai, you can certainly weigh in on this too, I think, and Paul, it broke $1 billion in financings in March, this past March, for the first time since May of 2011, which was at the end of the last bull market run.
Yeah, no, we definitely see the trickle-down effect, if you want to call it that, because we touched on that in our last interview series, or last session as well, is that let's call it the tier 1, tier 2 companies are done financing. They're gearing up for their exploration programs now this summer, and now the tier 3 companies are financing. We see a lot more sub $3 million financings of companies I personally have never heard of. So there's a lot more activity in the tier 3 space now, and the smaller companies are doing their financings now. So that's exactly what we're witnessing.
I think you've got one of these underlying drivers, and we've mentioned this several times in the past, the lack of projects.
Mm-hmm.
Majors are having to sort of buy into projects to fill their pipeline, to have a pipeline. Mid-tier companies are having to do the same. We see mid-tier companies like IM Gold doing entering into strategic alliances or joint ventures with smaller companies to put their foot on their projects. And the big companies are doing similar things. We've seen Goldcorp being very active recently, Barrick Gold as well. Even the big companies seem to need to have to bulk up to be able to get into position to develop some of the bigger projects in the future, mitigate sort of capex risk, and the sheer scale of the projects. And I think that's trickling down, or that's present throughout the chain.
I would agree with that, but I would also add that the majors' acquisitions and some of the moves they made over the last month, I would classify that they did not learn their lesson from the debacle, the major gold miners, the debacle that they promulgated on shareholders from 2003 to 2014 or so. I look at some of these acquisitions amongst the big three, and I would call it dumb, dumber, and dumbest.
I was going to touch on that and ask you your thoughts on.
Do you think we're at the inflection point where the switch from capital discipline is now being thrown into?
Oh, well, very well put, Paul. You nailed it there.
No, that's a good observation. I was going to ask you whether you think, one, whether valuations are justified, but two, also, are the projects actually worth their salt they're buying?
Well, I won't weigh in on the valuations, whether they're justified or not, because some of these things have been very much share deals. But the value of the acquisition, I mean, the things that have gone on over the last month or so are just totally uneconomic projects. And the one that really sticks out in my mind would be the deal that was just done in the Maricunga Belt between Goldcorp and Barrick.
Cerro Casale.
Yeah. And Cerro Caspiche, too. Those projects, I dare say, will not be developed in my lifetime, in Paul's lifetime, or even a millennial like Kai's lifetime.
Since you brought up South America, I think, to wrap things up here today, I'd like Paul to give us his insights into the Copper Conference there in Chile, and really take us, along with him there, what he saw, and really talk about his observations there, Paul. That'd be hugely appreciated.
Of course, there were about, 650 people, delegates at the World International Copper Congress in Santiago. And whilst there was a bit more positive, the producers are really looking, or the industry is really looking at $3, $3.30 copper before there's possibility or real chance of significant investment in more copper production capacity. in the meantime, the markets are going to continue to get tighter, particularly the copper concentrate market. There's a lot of more smelter capacity being developed in Asia, and there's not new supplies of copper concentrates coming through. So the market forces in the copper sector, the fundamentals are getting stronger and stronger, but the copper price hasn't really sort of broken out yet. So the producers are, I would say, cautiously optimistic. They see copper prices going up, the market continue to improve, China's coming back, but they're not prepared to make big investments yet until copper price gets substantially higher.
Allow me one follow-up. How do we benefit as the retail investor or the smaller investor in the space from that?
Well, in copper more than gold, the absence of new deposits, new projects, is even more marked. And one could argue it's even more essential because copper is a material that's very much in use and very much demand. As we move to a more sort of energy efficient, renewable energy future, electric vehicle future, copper will play a key role in all of that. So the outlook, the demand outlook for copper is very positive, buoyant, and healthy. So in terms of investors being able to benefit from that, you're looking at for juniors with good copper exploration projects and deposits that at some moment in time, the majors, the producers will have to buy. There's an absence of projects in general that will be able to sustain a production of 400,000 tons a year. Going forward, copper producers are going to have to be competing for smaller projects because there just aren't going to be the big projects available.
Okay, great. Thanks, Paul. Thanks for your observations there. And Mickey, also thanks for your time just before Easter here. So really appreciate it. I hope you have let's say a happy holidays. Enjoy your Easter break here. And we'll be catching up with you very soon. Thanks again for taking your time.
Thanks a lot, Jens.